Every loan out there, like every single loan out there, like gets purchased by the big bank. That takes that paper off of any of the small regional banks' hands. So a bank failure doesn't really affect anything with the real estate market. It doesn't affect subject to, because there's still a lot of people out there with low interest rate mortgages that need to sell their house. And now that the market has corrected a little bit, maybe they want a little bit more for their house than what it's worth. And the only way for us real estate investors to like make that work is to do a subject to deal where we assume their loan that's at like a 3% interest rate and use it as a rental. Like that, I think is going to be huge, and it has huge opportunity right now is buying subject to deals. I don't think a bank failure, well, we've seen since these banks started failing that the mortgage interest rates have dropped just because they're forecasting the Fed to back down on raising that Fed funds rate, which would have effect on the mortgage rates and helping those stabilize or even go down. So we've actually seen mortgage rates go down, which affects the market values and demand and everything positively. I think the banks failing definitely hurts like consumer like confidence and outlooks and stuff like that, but for the most part it really won't have a direct effect on real estate.